You're listening to the Savings Tip Jar with Dom Beattie and Denise Raywood. Brought to you by Savings.com.au, your home of savings news, guides and product comparisons. Hello savers, great to have your company for another episode of the Savings Tip Jar. I'm Dom Beattie, the editor of Savings.com.au, alongside our senior finance journal extraordinaire, Denise Raywood. This week, we'll be rounding up the week's main money matters, including the latest on that proposed $1,000 instant tax deduction and the rumours on what's going to be in the next federal budget. Then we'll talk to our Savings Scribe, Bea Garcia, about her latest guide to the bank of mum and dad, before rounding out our show with our dollar dialogue with finance influencer Queenie Tan on how to regain control of our finances, especially in this climate, and her guide to maximising every dollar spent. And of course, we'll each share a savings tip along the way. G'day, Denise. How you doing? Feeling savvy?
I am feeling very savvy today, Dom.
That's the way.
Lots happening, but in a way, there's been a lot on hold as well. So we'll talk about that.
Yeah, for sure. But first thing that we like to talk about on the podcast, of course, is our savings tips. What have you got for me this week?
Well, mine's about travel, and it's mainly because I've been having a lot of conversations with people about travel and what they should do, and things are up in the air. So this is just some generic advice. First of all, if your airline cancels a flight that you're deciding whether you should go on or not, and I'm talking to a lot of people who are sort of planning these Euro summer ventures, your airline will give you a refund if it cancels the flight, depending on your terms and conditions, of course, of your ticket. But if you cancel the flight, you probably won't get too much back. So maybe wait and see. For those going through the Middle East, there's been quite a bit of flight cancellation activity for Qatar Airlines, perhaps more than Emirates. And the other thing is, if you do go on your flight and you get to a destination and you've taken out travel insurance, which is pretty wise, just know that many policies don't cover claims related to war. So if you get stuck somewhere and you're thinking it will be covered, if your travel insurer can sort of relate that back to war, you may not be covered. So take that into account as well when you're deciding what you do. I think war and terrorism are just no-go zones, and that could be a little loophole that you may or may not know about.
Yeah, that's a pretty big exclusion. I think I've seen a lot of them as well. Also, don't cover natural disasters. You know, they'll call it like acts of God or something like that. So
yes,
you kind of wonder, well, what are you covering me for? Is it just, you know, if I have an accident that, you know, I make a mistake on my own? But yeah, that's pretty big. And I dare say a lot of flight cancellations would, especially these days when you're flying through the Middle East, would be to do with a certain skirmish that's going on in that part of the world, as opposed to weather events. So yeah, that's an interesting one. But worth keeping in mind for sure. But it is a bit of a gamble, of course, if you're hoping to cancel your trip altogether, and you're just hoping that the airline cancels the flight for you rather than you cancel it, because you might end up having to go on the trip if they don't end up cancelling. So that's but no, that's good to know, Denise. Thanks for that one. My savings tip this week is to do with Facebook Marketplace, because I've been spending a fair bit of time on there lately, mainly trying to sell stuff. You know, we've got a whole lot of junk that we want to get rid of and make some more space. But one thing I noticed, because I have been doing a little bit of shopping myself on there, looking to buy some items for a home gym, is a lot of the items on there actually aren't that much cheaper, if at all, than how much some of these goods would be buying brand new. You know, I was looking at like gym benches. It's work on my pecs. You know, do some bench presses, and you see the old rusty ones, like quite worn and probably like full of the previous owner's sweat, selling for like $250. And then I was like, well, is that how much gym benches really cost? And then I'll just have a look at some brand new ones. Even places like Bunnings will have this thing called Bunnings Marketplace. They don't actually keep it in the stores, but you can order them online from there. A decent quality looking bench there for $170 brand new. So yeah, my savings tip is don't assume secondhand items on Marketplace are cheaper than brand new. If you are looking at an item, don't just assume it's a bargain because it's used and secondhand and it's on Marketplace. Just have a look at how much it actually costs to buy a brand new one. I'm actually selling. I've got this old rusty letterbox that we don't use anymore. It's just been stored away in the shed. I meant to chuck it out, take it to the dump, but then I thought maybe I could sell it. Someone might make use out of it. Maybe like Christmas time, they can paint it red and make it like a Santa letterbox. I looked at what letterboxes are selling for, like brand new. You can get some for like $20. So I thought, okay, I'll just put it out for $10. Maybe someone will be crazy enough to buy it. I've just been flooded like all last night and this morning with messages from people all wanting to buy this old rusty letterbox for $10. And I just kind of thought it's not that much of a bargain really if a brand new one costs $20. But people are keen. So, but I just wonder, are they aware that you can get a brand new one for $20? Maybe not. So that's my savings tip. Don't assume secondhand items on Marketplace are cheaper than brand new. Right. Getting into the money news for this week. This one, look, it's kind of, I'll put some, double quotation marks around the word new here, news, because this actually was announced over a year ago, I think. It was formally announced by the Labor government. But it's in the news again because there's public consultation on draft legislation commencing this week on it. And that's the $1,000 instant tax deduction that the Albanese Government has proposed. So there was a mid-release by the Treasurer, Jim Chalmers, on this one. About this one and how it will help workers cut back on the paperwork and save them time and money at tax time, because it'll allow them to knock $1,000 off their taxable income without providing receipts when they lodge their 2026-27 tax return. So that's not for this coming budget season, but the following budget season. So it's estimated that 6.2 million workers will benefit from the proposal, with an average tax saving of $205. And apparently around 3.3 million of the taxpayers who benefit are women. So that's 54%, with an average benefit of $200. So essentially how it works, taxpayers claiming more than $1,000 in work-related deductions will still be able to do so in the usual way, but it's just people who are claiming less than $1,000. Which is reportedly about 6.2 million workers. But it is worth noting as well that charitable donations and other non-work-related deduction would continue to be claimed on top of the instant tax deduction, as with union and other trade, business or professional association memberships. So you can claim those and charity donations on top of the $1,000 deduction. So consultation with the public starting this week. So I guess that's puts us one step closer to this proposal being formalised, and that's the reason why it's in the news this week, Denise.
That's right. It's interesting. There's been not too many new rumours about things that are going to happen in the budget, but I did notice yesterday a friend of the pod, Shane Oliver, our economist mate, came out with a very well-titled Never Waste a Crisis, the top 5 things needed in the coming Australian budget. And Shane's pointed out that the government should desist from making any cost of living stimulus because that will only add to inflationary pressures. And a lot of economists don't like any of these cost of living measures that have been characterising previous budgets, like energy rebates and, all sorts of sort of middle class welfare. So that's an interesting thing. I actually think, the people putting that budget together, it's so uncertain, the global economy at the moment. So it must be hard to know how far to go with things or whether the timing is right for things. So Shane Oliver, I always think he takes a very measured and sensible approach to many economic things. He said that government needs to actually cut spending by around $100 billion. We're seeing today, interestingly enough, Mark Butler is going to speak to the press club today. It's around lunchtime, and we're recording this before lunchtime, about some changes to the NDIS, looking to not cut spending for the NDIS, but to sort of limit the growth in spending that happens annually. That's somewhere around the 10% mark at the moment. He's trying to just cut that back to 5%, 5 to 6%. That's still $6 billion a year, though.
Out of control, yeah.
And, they're looking to do that sort of a year-by-year thing of cutting that growth for the next decade or so. Some of the measures that they've already said will happen will be mandatory registration of NDIS providers, and it's quite a small percentage are registered, and you think that would just be a very basic thing that would have happened at the start of the scheme. So I don't think you can complain too much about that. Some of the pricing rules and just limits to some particular plans and tightening of independent living support. So a few measures that we may have already heard about. Also diverting people with sort of autism, and mainly young people, children with autism spectrum, onto a separate Thriving Kids program. There's been a lot of conjecture about, what's going to be announced, and there'll be a lot of people waiting to hear today what is actually said. So that's something that we'll find out today. It'll also give us some idea of, how much may be cut there. And of course, the other budget rumours are things that we sort of know about investment property wise. There hasn't been much movement on, perhaps limiting negative gearing to just 1 or 2 properties per investor. And as we know, 71% of property investors just have one property anyway. I think there's about 19% that own 2 properties. But we've got to remember that maybe not both of those will be negatively geared. Perhaps not negative gearing won't bring in too much of a windfall if those changes come in. Although the capital gains tax, it'll be interesting to see what happens with that. 50% discount for capital gains tax for people that sell their properties after holding them for at least 12 months. It's looking like that may be cut back to 25 to 33%. And that's interesting to see as well, whether that will be a retrospective thing or whether it will, start in the future. And I know you've got things about that you have troubles with that, Dom.
Yeah, well, it's an interesting one. Like we don't know for certain, obviously, any of this is all bit rumour and conjecture at the moment about what's going to be in the budget, but it does look likely that there is going to be changes to capital gains tax treatment, particularly for property. I mean, we're still not sure, is it just going to be restricted to property, or is it going to apply to other assets like shares as well? But yeah, the question over whether it's grandfathered or not, I think, is quite critical. I can sort of see arguments for both grandfathering and not grandfathering. I mean, if they don't grandfather it, then you could have a real problem on your hands with people just doing a fire sale of all their properties, trying to sell their properties to take advantage of the 50% capital gains tax discount while it is still applicable, because they will have they'll have to announce an end date when it ends. So people will probably be rapidly selling, and that could cause all sorts of problems in the market. And, so much of our finance is all guaranteed by property. So if property prices just start rapidly plunging because there's fire sales all over the country, that could cause real problems for the whole stability of the whole financial system of Australia. So there's issues there. But if they do grandfather it, I could see a lot of people that have been calling for these discounts to be wound back, particularly coming from younger generations, pointing out the older generations and how much money they're all making out of it. But if they grandfather it, then that's those older generations will continue to benefit from it. And it just kind of is like pulling the ladder up behind them, and younger generations won't get that tax benefit. They won't be able to invest in property and have the same sort of discount on their capital gains tax. So they would be feeling quite aggrieved, I dare say. So it's going to be interesting to see. And then the negative gearing question as well. Still haven't seen any confirmation about what's going to happen there, but it is being talked about a fair bit. And I dare say that I think it's, in my opinion anyway, it's looking more likely than not that they will announce some sort of restriction. They're not going to completely get rid of it, but I think they will, probably, like you sort of suggested, maybe restrict it to one or two properties, but maybe they again, it's a grandfathering, and also they're restricted to, maybe there's no limit on using it for brand new properties, because obviously they still want to encourage plenty of new supply onto the market, and so maybe you can have as many brand new properties negatively geared. I don't know, but that's kind of my instincts are telling me. So it's certainly going to be interesting, but it's going to be handed down on the 12th of May on the Tuesday. So that's just a couple of weeks from now. I'm trying to open my calendar.
Yes, it is. Before that, we've got the Reserve Bank meeting just the week before, and that'll be an interesting meeting as well, given that we're expecting inflation to be higher, and that's next week. We actually start to see the inflationary effect, perhaps, of the Middle East war on what it's done. Petrol prices, of course, are taking up a big unexpected part of people's budgets. We wouldn't have thought that at the start of 2026. It'll be interesting to see how the Reserve Bank has to balance, we're going to have some inflationary effects. It's not really the fault of the people. There's also, depending on how long the blockage of the Strait of Hormuz goes for, we could be looking at some recessionary sort of prospects. So very interesting to see how the Reserve Bank weighs all that up, and it's an unenviable job, obviously, because of just the uncertainty how that goes. So there's some interesting things coming up that we'll definitely be keeping an eye on and covering.
Yeah, well, I saw the latest development is the in that strait, in that war in general, the ceasefire has been extended, but the US is continuing its blockade of Iran's ports there. So it's they're not quite out of the woods yet. But if you look at petrol prices at the moment around the country, it sort of seems like a lot of the price setters there think that maybe we are a bit out of the woods, because prices have come down quite a bit lately. I'm seeing, for unleaded 91, it's quite a bit under $2 in a lot of places. Seeing it like $1.95, $1.90 some places. Meanwhile, diesel has come down under $3 in a lot of places too, which is good. I mean, I'm seeing about $2.80. Some places for diesel at the moment, so that'll be a relief to diesel drivers. Even the low $2.70s. Just looking at one quite nearby me is currently doing $2.72. So that's some relief there for petrol price watchers. I'm still continuing to use the 7-Eleven fuel price lock. I've been using it in terms of actually just locking in a price, but haven't actually been using it in terms of getting that locked price, because the locked prices lately is consistently higher than the prices I can actually get at the servos currently. But I keep locking every time, because it expires every 7 days. The lock it unlocks, and then I just lock in again, just as a bit of a hedge in case prices start picking up again. So I've locked in again for $1.95. I feel like I won't be using that. I'll prices seem to be coming down a little bit, down to the sort of a $1.80 mark. But yeah, if obviously the war situation can turn on a dime, and then oil prices can start rapidly accelerating again, and then I'll know, well, I can fill up for $1.95 still for the next 7 days. So yeah, that's the latest on fuel prices, and that I think will round up our news roundup section for this podcast. So I think it's time to talk to our first guest of this week's episode. All right, time for our Savings Scribe segment, the segment where we talk to one of the Savings Scribes in the team, as in our finance journos. And this week we're talking to Bea Garcia, who's recently written a piece for infochoice.com.au on the bank of mum and dad. G'day, Bea. Great to have you on the Savings Tip Jar podcast once again.
Hey guys, thanks for having me again.
Bea, before we start, what is your savings tip for this week?
Yeah, my savings tip this week is quite simple. It's to bring water everywhere. Bring a reusable water bottle and refill it whenever you can. It really just saves you from constantly buying overpriced drinks, and I think it can be especially useful while traveling, where bottled water prices can jump easily.
I love that. Although some of the water bottles these days are, quite an investment.
Yeah, that's true.
Yeah, and that's a good one. Because when you are out and about, especially on a hot day, and you're very thirsty, those vending machines with the Coke with ice all over it on the vending machine art does look very tempting sometimes, and it is quite ridiculous how expensive. I'm sure like a can of Coke or something from one of those could easily set you back $5 or more, which is a lot more than they're really worth. So just keeping a bottle of water on yourself and staying hydrated can certainly reduce the temptation, and also health benefit too. Much better for you, much more hydrating drinking water than anything you'll get out of a vending machine. So nice one, Bea. Getting into this topic, bank of mum and dad. We talk about it a fair bit on this podcast, but in case people aren't aware, I think it's probably worth starting off with just a general summary of what the bank of mum and dad actually means.
Yeah, so the bank of mom and dad is really just a catchy way of describing financial help from parents to their children when buying a home. It's not one size fits all. It can take many different forms depending on the family situation. For some, it can be as simple as a cash gift to help cover the deposit. For others, it can be a structured loan. But what's really interesting is how common this has become with property prices rising. Saving a full 20% deposit on your own has become incredibly difficult for many first time buyers. That's why more young people are turning to their parents for help. It's a very realistic, practical way to get into the market. In a way, parents have become one of the biggest informal lenders in the housing space.
That's amazing, isn't it? So apart from just, handing a wad of cash to your kids for a deposit, what's some other ways that parents can sort of help their kids get into the property market, Bea?
Yeah, so there are quite a few options. Like you mentioned, the most common is a cash gift, where parents contribute part or sometimes even all of the deposit. This can be usually around 10-20% of the property value. And lenders will often require a formal letter confirming it's a gift and that it doesn't need to be repaid. Another option is an interest-free loan. This can be appealing because it protects the parents' money legally. It remains their asset and isn't treated as part of the child's shared property if something like, let's say, a breakup happens. And then there are more involved approaches, like parents buying a property themselves and renting it to their child, or even co-purchasing a home together and splitting ownership and repayments. Acting as a guarantor is one thing too. It's quite common as well. In this case, parents use their own property as security to help their child qualify for a loan or avoid paying lender's mortgage insurance. But keep in mind that each of these options will come with their own benefits and risks, so families really will need to think carefully about what suits them best.
Yeah, absolutely. No, it does seem very common these days, and it makes sense. It's a form of early inheritance, which it probably does make more sense to give, if you are going to help your kids out, to help them out at what now, while they're in that most difficult period of their life, trying to afford to buy a house, as opposed to, say when you pass away. And often when you pass away, your kids could be in their 60s. So, and by then maybe that they might actually not need that assistance. So it is giving them that inheritance, while they most need it. So I can understand why it's very common at the moment, particularly that given that a lot of boomers are very, very cashed up. Having benefited from a lot of the booms that we saw sort of through the 80s and the early to mid 2010s, particularly with property prices absolutely exploding. So, there's a lot of very cashed up mums or dads that have become banks for their kids. But I just wondered, Bea, are there any downsides for the kids relying on the bank of mum and dad?
Yeah, there definitely are, and it's very important not to overlook them. While parental support can make home ownership possible much sooner, it can also introduce financial and emotional risks. One of the biggest concerns is really what happens if your circumstances change. For example, like if the child loses their job or they go through a relationship breakdown. And in those cases, parents who've contributed money might not get it back, or worse, they could even find themselves financially exposed. If parents act as guarantors, the risk can be even higher. They're essentially putting their own property on the line, which means that if the loan isn't repaid, the lender could go after them. Well, it's not that common. It can be a real possibility. And then there's also, of course, the relationship side to think about. Money can complicate family dynamics, especially if expectations aren't clearly communicated upfront. So disagreements over payments, ownership, or even lifestyle choices can create tension. So while the benefits are clear, it's just as important to have open conversations and put proper agreements in place before you move forward.
Yes, I've heard a few horror stories. Obviously, I'm of the age group where I have friends who have been the bank of mum and dad for their own children, and things may not always go as they think. I have got a friend who's a lawyer who was telling me about some case studies that he knows of where mum and dad have lost their homes, and the equity that they had in their own places has been eroded through, quite a few sad stories, and there's a lot of things that can happen along the way. It's not always the big solution either for the young person buying the home, or for the mum and dad. And I think I even remember David Koshy speaking about this. He had some friends in his circle that had gone through some troubles from getting into those types of arrangements. So, what should first home buyers in particular keep in mind, before sort of accepting help from their parents, because it can be a two-edged sword?
Yeah, definitely. I think the key is to treat it like a real financial arrangement and not just a family favor. It's important to understand exactly what kind of support is being offered. Is it a gift, a loan, or maybe something more involved? And how that will affect your future finances. You also need to think about independence, because while the help can get you into the market faster, it may come with expectations or obligations that can last for years. And it's also worth considering how it impacts your borrowing power and your long-term goals. And just as importantly, like I've mentioned earlier, have open conversations early. The more transparent everyone is about expectations, the less likely is it that issues will come up later on.
Yeah, absolutely. That's all worth keeping in mind. It's, while this sort of assistance from the bank of mum and dad can really make a huge difference and really be the difference in between you affording a house or not, it certainly can create a huge source of tension. From both sides, if the parents are sort of holding it over their child as leverage and forcing them to, make certain choices because they have this financial power over them, and their kids have to do as they say. But then on the other hand too, if your kids are sort of taking the mick and they're not paying the loan, and say you've offered your own property up as guarantee for their loan, then you could be in real strife if they're not, if they default on the loan, and you're unable to pay the repayments for them. That could cause real problems. So yeah, it's certainly not without risks on both sides there. But yeah, nice summary there, Bea. But for those listening who want to get a more complete read of Bea's guides to the Bank of Mum and Dad, you can visit infochoice.com.au and read her piece in full there. Bea Garcia, thank you so much for your time on the Savings Tip Jar.
Thanks, Tom and Denise.
Great to have you, Bea.
All right, time for this week's Dollar Dialogue. And in these trying economic times, there's no doubt many Australians are looking to be smarter with their spending and try to make every dollar go that little bit further. Perhaps that's by embracing rewards programs such as Flybys. Now, one person that's renowned for making every dollar count, because she showcases this to her hundreds of thousands of followers online, is Sydney-based finance influencer, author and entrepreneur Queenie Tan, who I'm pleased to say joins us now. G'day, Queenie. Thanks for joining us on the Savings Tip Jar.
Thank you so much for having me.
Thanks for joining us, Queenie. Before we get started on all this information that we all need to know currently in the current climate, have you got a savings tip for us? I think you'll be good at this.
Yes. Okay. I had to think about it because I wanted to make sure it was actually decent. But okay, this is a reminder to everybody, myself included, but just look around you. You know, is there anything in your home that you don't use anymore? And you could literally sell that on Facebook Marketplace and earn some money. So the other day I sold this like baby bottle sterilizer for some money. I have another person coming and she's coming to pick up some shoes for a hobby that I don't do anymore. And, you know, the other week I sold this like little, it was basically like a little piece of equipment for like recording kind of content and like videos. And it's like, it really does add up. I know it doesn't seem like much money, like, you know, $15 here, $50 there. But some things, it really does add up over a year. Like I love tracking how much money I spend and also how I'm earning my money. And I checked for the whole year last year. And my partner and I, we made like a few $1,000s by like selling things on Marketplace, which is crazy. So like, is there furniture that you don't need? Like you can really get creative with it. So it's like, it doesn't seem like much, but it adds up to a lot of money. I'm
totally 100% right there with you there on that one, Queenie. I was just talking to Denise just before this chat about how I'm amazed at what people are willing to spend money on Marketplace. You know, I've found this old letterbox that we replaced, and it's rusty. It's still got chunks of concrete attached to the post at the bottom. Bits of the chain have come off so that the number's not even like hanging properly. I just put it on Marketplace for $10, see what would happen. And I'm getting messages. I'm still getting messages about it. People are lining up to get it. It's incredible. And, you know, I've especially kids stuff. Like, you know, I've got 2 young kids of my own. And, yeah, we've bought a lot of the stuff, particularly our most recent one on Marketplace. So it's, certainly good. But as I warned earlier in the podcast, not everything on there is a bargain. I think some people tend to assume because it's secondhand and it's on Marketplace, it's cheaper. But I've started finding that there are some items that you can actually buy cheaper brand new. So watch out for that one. Getting into the topic of the day. So I mentioned, you know, it's trying economic times at the moment. A lot of Aussies are trying to be smarter with their spending. So I guess we'll start off just asking you if you have any sort of actionable tips on how Aussies can regain control of their finances, and especially in this current economic climate.
Yeah, I think that one of the things that really helps me, and I used to really like fail my financial goals because I just made them too big, and I thought like I want to save $10,000, but then looking at that number, it just is so big, and then you just don't know where to start with it. But when you actually break that down, $10,000 in a year is about $844 a month, which is $27.40 a day. So, you know, when you break it down like that, you're like, are there some ways that I can save $27.40 a day? I mean, I think we all could probably think of a few things. Like, I mean, that's the price of like 2 cups of coffee and maybe a lunch or something like that, you know? So it's like, there are definitely ways we can do it. So break it down into smaller pieces, and then you can start looking like, you know, maybe you could look at switching your car insurance. That could easily save you a few $100s if you're on an expensive plan. Maybe switching your energy provider, or even like maybe looking at renegotiating your mortgage. That could easily save you a few $1,000s a year. So when you start breaking it down, you can easily find ways to make those small savings. And those small savings, they really do add up to a lot of money. I mean, yeah, $27.40 a day. Like, it's so easy to spend that money mindlessly. Like, I'm definitely guilty of it. But when you find those little savings, it really does add up.
The other thing I would like to ask you about, Queenie, we have a lot of rewards programs out there, so many rewards programs, and it's hard to know, are they really worth it? And how do you sort of get them from being, rather than a reward program, something that actually can save you money and used as a budgeting tool? What do you have to say about that? How does it work for you?
I would say I try not to get too sucked into the deals and like just buy things because it's on sale, but something I wouldn't necessarily buy, usually. So I try to just always make sure that I'm scanning, the rewards programs like a Flybuys card whenever I go shopping. But you can actually get kind of clever with it. I actually discovered like there are some pretty like wild things that people do with points. So one of the tips was, and I also like doing this too. Now I've kind of learnt this tip. I'm going to go in the habit of like actually doing this. So one tip that I heard was often like Coles and like, those big supermarkets, they do these like promos where you can buy gift cards and then you can get like 20 times bonus points basically with Flybuys. And someone bought a MasterCard gift card and then it was 20 times bonus points. But then they were able to use these MasterCard gift cards for things like paying for their council rates or paying for school fees, which I was just like, that's so smart, isn't it? And I saw another hack where like there was this lady, she bought like one of those Pamper gift cards, and then she was also able to earn extra Flybuys points from purchasing it, like 20 times bonus Flybuys points. And then she uses those gift cards to get her nails done every month. And it's like, just from getting her nails done every month, she earns like 20,000 Flybuys points in a year that she can use for like travel and things like that. So yeah, I think one thing that I'm definitely doing now is like making the most of those like gift card promos if I have like a birthday, or if there's something recurring that I buy, like beauty treatments or getting your hair done, nails done, whatever it is. Maybe you could get those gift cards, you get the extra Flybuys points, and then it's like you're saving money on something you would already buy anyway. But yeah, you get the extra points.
It's such a cool little workaround, Queenie. I hadn't thought of that one, because things like, council rate payments are not usually things that you can earn points on. I usually try and do all my spending with my credit cards, because it's a points earning credit card. But then, if I think I avoid doing that with things like council rates, because the surcharge is higher, so the fees end up being higher. But then perhaps if you buy the gift voucher, and then you get the Flybuys points, and then you pay for that council rate with the gift card, then that's such a clever hack, and I haven't thought about that. So I might be checking that out after this call. Are there any other things that, or just a general guide that you'd have for helping Aussies maximise every dollar spent?
I love that. And also, like, just wanted to add you can earn extra points if you do pay with a points earning credit card. So it's like you can really like triple dip how many points you're earning for like every purchase. So it's so cool. I would say maybe just get clear on like what you want to use your points for. So do you want to use it for travel, or do you want to use it to save money off your shop? And I think that that's really helpful, just to make sure that you are, or some people even use them and they save their points for Christmas and then they buy their Christmas gifts with them. I think it's quite exciting. And there are definitely lots of ways to use it, but just make sure that you're only buying stuff you would normally buy anyway, because sometimes I get like hooked in those things and I'm like, oh, if I buy like this random product I never buy, like I'll get all these points, but it's like, it's not saving money if you're like buying something you don't need.
That's what I'm always frightened of with those programs. You have to keep sight. Don't get distracted by the marketing. And you do get slammed with the marketing as soon as they can see that you're half interested. So, yeah, that's a good tip. And what about, the spend that we have to do, the basics, utilities, groceries, that's sort of what people are focusing on in this current climate. Any tips for that? Just the things that you can't get out of.
It's annoying. And it's like those like not sexy purchases, which are probably the best ones to look at because, if you can save a bit of money there, it doesn't really affect your lifestyle too much. A lot of people look at cutting out their daily, fun purchases like getting a coffee or a gelato. But if you look at those boring ones, maybe you can save money and not even feel it. So I would say there's this website called energymadeeasy.gov.au, and you can compare your energy plans and electricity plans, make sure it's competitive. I actually did this the other day, and I saw that my plan was pretty competitive, which is good because I only switched recently. So I just wanted to make sure that was the case. But if it has been like a few months, maybe a year or so, then I probably could have had some savings there. And another one that you can check is also greenslips.nsw.gov, I think it is. And they might have some different ones for each state, but you can also check your insurance and make sure it's competitive too. So those are just two easy ways that you could save money. Like maybe you might be leaving some money on the table there.
Yeah, Energy Made Easy actually helped me find a better deal for myself. I think I was with, who was it? Energy Australia or something like that, and I felt like I was getting rorted a bit on the price. And then I used that Energy Made Easy, and I was able to find that I could get a much better price with Ampol. But on top of that, Ampol at the time were offering 10 cents off per litre for their energy customers at Ampol stations, and that also saved me a lot of money on top of the electricity saving from having a lower price. So that certainly helped me there. So I highly recommend that one. Now, just lastly, Queenie, obviously you're a bit of an inspiration, I think, to a lot of young Australians because, you're someone that, as you've showcased on your various social media platforms, you rapidly built a net worth of, I think it's upwards of $1 million whilst in your 20s. And you showcased how to do it just through relatively simple means, saving regularly and investing, nothing too gung-ho, mostly ETFs. So I guess, what's one top thing that you would advise a young person to do right now to start building wealth?
I think the best thing to do would be, something that really helped me was I like to set aside 20% of my pay and have it automatically invested. But I do make sure that I am living below my means already. So whatever I'm earning, I make sure that I do have a bit of a buffer between my everyday expenses. So I know I can afford to invest that 20%. But honestly, out of sight, out of mind. Like as soon as that money has left my bank account, I don't spend it anymore because that would require me having to sell my investments, which I'm not going to do. And it's crazy how much it adds up. I did the math on how long it took me to reach each net worth milestone. And it's crazy how hard it is to go from $0 to $100,000. It's just so hard and it's so slow and it takes years. It takes years of cutting out everything fun. And, I was a bit miserable, to be honest, the first few years, really miserable. But, once you reach that milestone, it just gets easier and easier. And it's, it's pretty amazing. So I feel like if anyone's listening out there, it feels really hard and such a struggle, just know that it does get easier as you do build that momentum. And the beginning's way harder than, once you get that momentum, it gets so much easier.
It's like so many things in life, isn't it? The first step is the hardest. So it's a really inspiring story. And, it's great that, you've given that example to young people. I'm a mum with, kids in their 20s. And, I have to say I've brought them up to be fairly good savers. And but, it's great to be able to sort of see it work in person. So, good for you, Queenie. It's a good story to tell. So, great to have you on the pod.
Oh, thank you so much for having me. It's been so amazing to chat. Denise and Dominic, it's amazing to meet you both and to chat with you, and hope you have a lovely day.
Appreciate that. Thanks, Queenie. And really appreciate your insights. You've been a great guest of the Savings Tip Jar. I might have to have you on again sometime soon.
Would love to.
Thanks.
Thanks, Queenie.
Yes, that was finance influencer, author, and entrepreneur Queenie Tan, who has an app called Billroo. Check it out. And that brings us to the end of another episode of the Savings Tip Jar podcast. Thanks very much for listening. Thanks, of course, to our sponsor, Savings.com.au. Thanks to our guests, Queenie Tan and Bea Garcia. And thanks to my wonderful co-host, Denise Raywood. If you liked this episode and you want to hear more, please give us a follow on Spotify or Apple or whichever platform you like to listen to. YouTube as well is where you can find us. Please, if you do like this episode, do give us a 5-star review on Spotify or Apple or any of those podcast platforms, because it does make a big difference and helps other people discover the content. Please tune in next week for more great savings tips and money chats. So yeah, catch you then. Goodbye.